conventional home mortgage for the home buyer or first-time home buyer?
We love talking about these videos. We are not financial experts. We are not your lenders. However, we are real estate agents, so we see on the back end what is going on all the time. And sometimes conventional is absolutely the best choice for you in many, many ways. It's not just for second-time home buyers. It's for a lot of times first-time home buyers if it matches what you want. So a lot of people don't even believe that first-time home buyers can have conventional, and that's absolutely not true.
And the real question is the conventional loan is suitable for you as a home buyer at your current situation? And of course, conventional loan actually it categorized in two sections. The first one is the conforming loan, which is backed by federal banks and institutions like Fannie Mae or Freddie Mac. And the second one...
but they have to follow very specific government-run guidelines. Even though this is a bank loan, banks have to follow rules and guidelines in order to make sure that you are getting. That's why it's called a conforming loan. Another option is what?
Is non-conforming loans that basically they are non-federally backed and managed, and they managed by the private banks.
Right. Since these operate federally, and let's be honest, if you're self-employed, you're probably going to go with a non-conforming loan. It just is what it is because of the type of business that you choose to do. So now we're going to buy a home based on non-conforming principles instead of conforming principles in many situations, not all. There are specific ways a self-employed person can have a home, but I'm just giving you a heads up.
And before we continue dive into the video,
requirements,
let's do our introduction.
Yeah, so let's hit it. Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, we call text all the time at 252-327-3357. We love talking to you. Don't be shy. Also, don't forget our buyer's guide and seller's guide in the description below.
Exactly. Now, after we talk about the conforming and non-conforming loans, we wanted to talk about the requirement and the features that conventional loans has to offer. And right off the bat is we start with the credit score, which is what is the minimum credit requirement?
Typically, it's going to be 620. A lot of people who watch videos say, I have to have an 800 credit score. That's not true for a conforming loan.
Or 750 or
you don't need to have
think.
whatever high number. It's actually 620. So if you're over 620, you will qualify for a conventional loan.
Exactly. And then definitely but we should mention also that better credit is going to affect your interest rate. That
Absolutely.
is the reality. The second thing is the lenders. No?
Right. There are many, many lenders out there. And a lot of people will actually choose a broker to try to find their best lender for them in this situation because there's a lot of credit unions with rules, a lot of banks. A lot of banks that are just regional, a lot of banks that do specific type of loan products. So every bank does a little bit different. So make sure that you're using someone that actually matches what you want. And a mortgage broker, not that we care if you go to them directly or not, but a mortgage broker's job basically is to find the best product for you.
For you, exactly. The next thing is a down payment. It used to be 3% or 5%, depends on the lender, but as of end of the 2023, going toward the 2024, now there are many banks and financial institutions that they can start as low as 1% for your down payment.
Right, and there are some places where the government loans might have no down payment, but this 1% is really not much, and you do not have to have 20% is what I wanted to say. A lot of people say conventional you must have 20%. That's not true. The bank just has to see value in you and that you're a good lender. It's not that you have to have 20% down. It's nice to have 20%, but you don't have to have 20%. But if you don't have 20%, what are you getting?
Exactly. If you don't have the 20%, then part of your loan, you're going to have PMI or private mortgage insurance, which you need to pay monthly unless you pay 20% down.
Right. Now, there's going to be rules in your bank, and they're going to tell you the rules specifically, but it can be removed once 20% has been achieved, right? So once you've got 20%, there is a process to remove that PMI, so you don't have to pay anymore. You can request it. It will go automatically at a certain percent as well. Understand what the rules are. Understand how you can just call a broker, get a BPO, broker price, right? Or an appraisal, get rid of the 20% down, the PMI, and then you have a cheaper monthly mortgage.
Exactly. Now, let's focus a little bit about the advantage of conventional loan. The first thing that we wanted to talk about is interest rate. What
Right.
is
So
about
typically
interest?
the interest, well, at the filming of this video, interest rates for conventional were actually a little bit more than government loans because the
Government
government is controlling it more. However, you have more options with interest rates here. So you have a lot more flexibility with interest rates here. And of course, if your credit is awesome, you're going to have a lot of options with that too.
Yes. And in general, they allow buyers to basically afford a bigger homes or better terms based on the definition of the conventional loan. The second thing that we wanted to talk about is flexibility.
Yeah, that
What is about
you are
the-
not stuck in a 30-year term. You can get 10-year, 15-year, 20-year. There's no specific, even 5-year. They have many options, and I'm talking fixed rate alone. If you want adjustable, then there's a different adjustable rates as well. So there's a lot of flexibility depending on what product you're looking for at the filming of this video.
Exactly. And the third thing that we wanted to talk about is the loan amount. Based of that, the possibility that you have with this depends on your credit worthiness. You can get a higher loan amount for purchasing a home.
Right. Now, if you're in a different state where you have to go with those jumbo loans, then that's a different situation. But I mean, there are ways to make sure that you happen, and it's more likely going to happen if you qualify for conventional versus the government-backed loans.
Exactly. Now, we wanted to talk about a little bit of disadvantage,
Right.
you know? And the first thing is the credit score.
Right. If your credit's not 620, it's going to be very hard to get a conventional loan. Of course, if you have 800, it's going to get better terms, but you can still get credit. You can get a conventional loan with 620.
Exactly.
So you don't think that that's a barrier for you.
Therefore, at that point, you need to switch to another type of loan, like a FHA loan. And then the second thing we wanted to talk about is the down payment.
Right.
You know?
Now, sometimes coming up with down payment and closing costs are going to be a hurdle.
Exactly.
This isn't a government loan. This isn't a 0% down loan. It can be a barrier. It's not going to... With a conventional loan, if you're buying a $300,000 home, and there's ways to help you with this. I can't help you get you the down payment, but you're going to need for down payment probably at least you're going to need some money for down payment. 1% is going to be $3,000. 3% is going to be $9,000. You know, there's
and
there.
then closing cost is going to be something
Depending on the
$6,000
home.
to $8,000.
Depending on the home that you're looking for.
Exactly.
And there might be deals there.
Exactly. The third thing that we wanted to talk about is underwriting process for the conventional loan.
Right.
What is about underwriting?
They're going to want every document out there that they need. W-2s, pay stubs, bank
Assets.
statements, any sort of explanation for assets in there. So if you have a lot of money that you've moved from one bank to another, they need to understand why this money moved from one place to the other.
Therefore, they should do the paper trail about all of your money movement that you did to make sure that everything is clear. The next thing that we wanted to talk about, if you have a bankruptcy or history of bankruptcy.
Really quickly, this is going to kind of be a barrier for conventional, but it's not always. So if you're Chapter 7, it's generally a 4-year waiting period. What about Chapter 13?
Chapter 13 is 2-year waiting period post prepayment before the qualifying. No.
Right. Now, let's talk more about pre-approval process, right? I think
Yes.
that's more. So when you're looking for a conventional loan, you're going to go online. You're going to get a lot of offers. The second you click on one, everybody's going to call you to try to get you to give them their mortgage information with them. So just know you're about to get bombarded. Once you've applied for one, you get 20 calls. Easy.
Yes. Therefore, the most important things really is when you're shopping around, you're looking at the loan term and getting that loan estimate and cash to close for example, purchase of a $200,000 and see how, when you put it next to each other, how it's going to financially make sense for you.
And every bank has different terms and conditions, and they might call them different things. So understand really detail what the fees are that they're trying not to mention. Origination fee, I would never say that correctly. It could be underwriting fees. How much are those fees that this bank is willing to do?
Or even discount point fee that with the high interest rate, many of the banks are trying to basically knock down your interest rate by buying you discount points.
So understand all of that. So when you do get pre-approved, make sure all the conditions are on that pre-approval.
Exactly. And you basically can compare it and see if it works for you or not.
Now, make sure that once we have your pre-approval, it's super easy to buy a home for you, though. So that's super easy. So conventional is well liked by real estate agents, well liked by lenders. This is going to probably help you win that house altogether. So understand conventional is an option for you, and many people will choose this option.
Exactly. And then don't forget to call us at 252-327-3357, and also subscribe and leave us a comment. We love to connect with you, and see you in the next podcast and video. Thank you.